We don't like to think about downside a lot of times, but these are super important to think about as you're launching a new venture, which is number one, how will I know if this isn't working? And if it's not working, what is my exit strategy? The most powerful wealth building strategy on the planet that everyone needs to be following is rinse and repeat. What does that mean? Don't get distracted. After talking to thousands of entrepreneurs, I find where most mistakes come in is when someone actually gets distracted from the thing that makes them the most money that they're actually good at. How do we decide how to actually apply rinse and repeat in our lives? First, it's find the thing that you are good at that makes you the most money. So say, for instance, you have an email marketing agency and that's your primary service. Don't get distracted and start offering SEO or some other kind of service. Wait until you've perfected email so well that you're actually the best person on the planet. So do it over and over until you are so bored that you actually can barely get out of bed in the morning. That's how you know you're on the verge of some serious scale. And whether this is in your primary business or in your investment life, we all actually only need a few strategies. And even though society says that we need to be diversified and we need to invest in all of these different things, if we actually find one or two things that we're really good at and we continue to build our knowledge and continue to make mistakes, learn from them, and implement and refine our process, that's actually where the most powerful wealth building methods come in. So for instance, I might have 3 different ways that I am building wealth. Number one is my primary business. And for most entrepreneurs, that's where the bulk of your wealth is going to be tied up. Everything that we're taking out of our primary business, or in other words, our investable assets, needs to go somewhere. And rather than getting distracted with trying to invest in hundreds of different kinds of deals like I did, what I actually learned is that index funds and real estate might be the only 2 things that I want to invest in. And why is that? Number one, index funds are fire and forget. So if I'm just shoveling a certain amount of my money every month into index funds, I actually don't have to think about it. With real estate, I can actually get good at acquiring a specific type of real estate. And again, go through the process over and over and over, learn where the pitfalls are, learn how to do the proper due diligence, learn what kind of properties make the best returns. And over time, as long as I employ that strategy over and over and over, I'm going to be more and more and more successful over the long term. So a lot of us are familiar with the fact that Steve Jobs only wore a black turtleneck. And why did he do that? It was to eliminate the paradox of choice, right? If we wake up every single morning and look at our closet and there's 150 different outfits that we have to choose from, now we have to spend time processing which one of those is going to be the best for today. But what Steve Jobs figured out is if you only have black turtlenecks, you eliminate that whole decision-making process and you're actually not wasting time thinking about things that you shouldn't be. All right, so if we apply that same principle to both our primary business and our investing life, we think about the few things that we know better than anybody else on the planet and just do those things over and over and over without getting distracted. That is how we actually stay focused and make the most money in the long run. So a thing that we see really often is that just as someone is starting to reach expertise and really nailing their product market fit, the first thing they want to do, let's launch a new product line. Let's increase lifetime value by giving people more things to buy. So what happens is the moment someone starts to perfect their primary product and really nail that product market fit, they tend to get distracted and want to launch a new product line or a new venture or invest in a new business or launch a new company. All of those things end up being a distraction from the thing that they're actually really good at and that they have the most expertise at. And that's the thing that's making them all their money. There's 2 different types of ways this manifests. Number one is Midas touch syndrome. So that's if I'm an entrepreneur and I've been really good at making money in my primary business, I suddenly decide that I'm good at making money in all these other types of businesses. And that's really not the case. There's always a learning curve where we have to learn that new business. And a lot of times, we pay market tuition, i.e. losses, in order to incur that knowledge. And then the second thing is shiny object syndrome. And that's where, because we're entrepreneurs, because we crave excitement, we start launching new products or new business lines or investing in companies that we don't fully understand. And that's because we want to fill that craving for knowledge. And when you combine both of these, it can be a completely destructive force to wealth creation. That doesn't mean don't ever take risks, especially in your primary business. But when you are going to take a risk, you've got to ask really hard questions. So the first one that I love to ask is, am I doing this because I'm bored? Number two, have I actually done the research? Do I know what my plan is in order to execute this? And do I have all the information required? Now, we don't like to think about downside a lot of times, but these are super important to think about as you're launching a new venture, which is number one, how will I know if this isn't working? And if it's not working, what is my exit strategy? If we have those planned out, it keeps us from falling into sunk cost bias and losing a whole lot more than we would over the long run if we just had an exit strategy. So if you are going to launch a new venture, make sure that you enter slowly and then scale in over time as you build that requisite knowledge. Meaning, if I'm going to start investing in real estate, my first real estate acquisition probably shouldn't be $2 million if that's my total budget for real estate acquisitions over the next few years. I can start by buying smaller properties and then get better and better as I increase my leverage over time, and I can use that requisite knowledge in order to increase my returns. So do me a favor, we'd love to hear from you. Leave in the comments, what's your focus? What are your core investments, and what are the things you are not going to get distracted by? Because oftentimes, the things you say no to are actually more important than the things you say yes to. Thanks for watching. Hit subscribe and don't miss out on a single Wealth Factory tip, like this next one with proven ways to build your wealth.